Numbers were slightly better than expected on some metrics, but you've got to understand that expectations were really low going in. The business isn't doing great. There's not one piece of this business that you could look at and say it's doing really well. There was a slight improvement in wireless in a very, very benign competitive environment with Sprint and T-Mobile focused on other things right now, trying to get a deal done. We haven't yet seen the impact of cable on the wireless business. I think that's going to come later in the year. And that's the only piece of the business that showed any sign of growth, and it barely grew.
Craig, can you find a more positive spin than that?
No, I can't. You know, here's the problem. There's, as Jonathan said, there's no part of this business that's growing, and they don't get very high marks for transparency. You really have to dig through these numbers pretty hard to try to figure out what's going on in the business. But the organic growth rate of this business in the top line is negative 2.7%. The EBITDA growth rate is negative 6% on a apples-to-apples accounting basis. For a business that is levered at almost 4 times EBITDA when you count their leverage properly, a negative EBITDA growth rate of 6% and missing EBITDA consensus, by the way, by 7.5 or somewhere in that range, is a very frightening number. And Time Warner will help a little bit with the income statement. It hurts with the balance sheet. But these numbers, I think, unfortunately, are very weak.
Yeah, I mean, that does raise an interesting question, Jonathan, about how you value this company now. How does the sum of the parts analysis change with Time Warner, with AppNexus?
So I think it's really difficult. We've got a clear idea of what Time Warner was worth under the old management team in the context of the rest of the media space. But we're giving those assets, which were phenomenal assets up until a few weeks ago, we're giving them to a management team that doesn't really know anything about the media business. And this is a tough business at the moment. We've got a raft of new competitors who are being wildly successful in the business. The whole distribution model is going through a shift. The monetization model for the business is going through a shift. So it's what these assets going to be worth in AT&T management's hands. It really remains to be seen. Look at the asset that they just bought, which is DirecTV. They bought that at more than 8 times EBITDA just a couple of years ago, and it's probably worth 4 times EBITDA today.
Craig, Netflix is on a phenomenal valuation. Cannot HBO, with some distribution, get given a better valuation than you guys are suggesting?
Well, it's hard to see why it would have a different valuation inside of AT&T than it had inside of Time Warner. But you know, look, it is an interesting philosophical challenge. If HBO suddenly became Netflix, which is to say, a very large pool of customers losing a lot of money, would it get anything like a Netflix valuation inside of Time Warner or inside of AT&T? I strongly doubt it. I think you'd have to. It would stretch credibility to think that you would have a Netflix-like multiple on revenues on a business like that.
You guys are super bearish for a company that just raised earnings and actually showed its core wireless business.
Well,
with some improvement.
Remember, though, the reason they raised earnings in large part was because they're now including the Time Warner entity. So that's what I mean by the transparency is not very good. They don't give you a simple chart anywhere in their earnings that says, here's what our growth rates actually are on an organic basis. But organically, this company is shrinking, not growing.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.